Hi everyone, welcome to this live coverage. I'm here with Yohay Elam from ForexCrunch and Mauricio Carrillo from FXStreet, and we are here to walk you through the Bank of England decision. How are you guys?
How are you, Valeria? How's it going? Hi, Joe. Hi, here ready to go with the questions from the audience.
Everything's fine in here, and well, the Bank of England has launched a lot of easing during the last month. It cut rates to record lows of 0.25%. It enlarged its assets purchase program. So actually, we're not expecting too much action for today. But well, I believe that Carney may have something to say, and that's where the focus of attention will be, right, Yohay?
Yeah, we have the meeting minutes as usual. In the past year or so, the Bank of England also releases the meeting minutes. That's an opportunity to see, well, how different members voted, probably a unanimous vote. But on the other hand, we'll see if they acknowledge that Brexit was not such a big disaster so far, or that they're still very worried, very dovish. That means we still have a rate cut coming in November, which is their next quarterly inflation report.
Well, Carney said a couple of weeks ago, I don't remember the exact word he used, but that he's feeling comfortable what he did, and that if the latest UK data is not as bad as initially estimated because of a Brexit, is because of he acting quickly, right? He says, and I can't remember the exact word he said, but anyway, he tried to give us a message that he's comfortable with what he did, and that's why I'm thinking that we probably not get much action today either. But well, we don't know never with central banks, right?
Yeah, and Carney did manage to create high expectations last time, but beat those high expectations, something that his colleague Draghi didn't manage to do in the recent past. So Draghi is able to surprise markets. So yeah, maybe this time as well.
Well, I do believe that there's a huge difference between Draghi and Carney, because Draghi is always talking and promising and saying and actually acting less than 10% of the times, maybe. And yeah. Carney does not talk too much, but he said after Brexit that they were planning to do something about stimulus, and they did as soon as August, meaning I don't think he talks in vain, you know what I mean?
Yeah.
If he does something, he will do it. If he doesn't say it, it's okay, and that's how things are, and that's it.
Yeah. Maybe so last time they cut interest rates to 0.25, the first rate change in over 7 years. They also added more QE, the first time in 4 years, and now it's 435 in total. This includes 10 billion of corporate bonds. And they also introduced a new funding for lending scheme called TFS, and also some other regulatory changes. Everything is expected to remain unchanged. Only 1 month has passed since their last decision.
Yeah, I would like to say something. It's not relevant maybe for today, but I was checking the Bank of England page yesterday and found out that this is the last monthly meeting they will have. From now on, they will have only 8 meetings in a year as the ECB. So we are not expecting a meeting for October, guys. And they will change this schedule, although I'm not sure of when next meeting will come.
November.
November?
Yeah.
Okay, yeah, thank you, that's right. Okay, so maybe 6 weeks in between meetings from now on, as the ECB did in a couple of years ago.
So perhaps they want to have a more wait and see mode, between each meeting. So yeah, go ahead.
No, I was thinking that it will create larger expectations among investors.
Yeah, and I think also they're also moving to, well, it's only 8 meetings per year, and one meeting is accompanied by the what they call quarterly inflation report, and the ECB does the same. It has 8 meetings in total, but only one is, I mean, every other meeting is accompanied by new forecasts, and like the Fed, also the Fed has 8 meetings, but only the bigger ones are March, June, September, and December, when they have new forecasts, dot plot, and the press conference. So these 3 central banks have 8 meetings, but 4 of them are more important than the other 4.
We're having one of those one next week with the Fed, right?
Yeah.
Big one. Everyone is excited about it. Let's see what they have to offer.
Well, we have 5 minutes to go, but also we have more data from the United States later, right? Retail sales, PPI, initial jobless claims.
I was checking and I was hoping that that kind of data can move the euro dollar out of this range, right? We have been trading flat around 12.30 for already 4 days. No direction there, and I'm hoping that retail sales, inflation, unemployment, and manufacturing figures coming from the US can wake up the pair today. I believe that that's quite interesting data because it's going to tell us how's the health of the US economy, right? And can fuel or deny chances of the market running or going away from the dollar ahead of the Fed meeting next week, as we were saying. I mean, this will probably give us a hint of what the Fed can do next week.
Yeah, retail sales is the most important figure and really a big bulk of releases today. Most of the US economy is about consumption. Anybody who's been to the United States can easily see that it's buy, consume. So this is the most important figure. It has disappointed many times in the past year or two. For those that do not believe Brainard, which was very dovish early this week, I think retail sales are sort of the last chance for giving us hope for a rate hike, those who want a rate hike. So I think they need to be really extremely strong, something blockbuster strong to perhaps open a chance for a rate hike, but
you don't see that coming.
No, I think they'll give the Fed another excuse not to raise rates. They'll be sort of mediocre, even under expectations. That's what I think.
Okay, yeah, well, I have to agree with you, although I don't like it. But I have to agree. Okay, less than 3 minutes ago. Remember, guys, we have a bit of delay, and what we are expecting mostly is whatever the statement has and the minutes announced, rather than a change in the ongoing economic policy, right?
What levels are you looking at on cable?
Yeah, there are a couple of levels I'm watching. Let me enlarge my chart. I still believe that the key for the pound is this 33.20 region, where the pair has been unable to run beyond ever since Brexit. We have a couple of spikes, but they have been quickly reversed. It's a Fibonacci area, maybe in between 33.20 and 33.50 is the region, right? The zone that we need to beat to talk about a more bullish pound. If we beat that level, we can go up to that 34.40, 45, I do believe. Yeah, that was early month high. But above that level, I'm watching 34.80, 35, but actually not thinking that the price can go that high today. Seems a bit too much. And to the downside, we have been finding some intraday buying interest around 32 today. So below that level, I would expect a retest of yesterday's low. Okay, 31.30 region, and below that level down to 30.80, 30.90 or so. Those are the levels I'm watching for today.
Yeah.
Hopefully we'll get some action.
This is our way every day.
Yeah, not expecting much reaction from the euro dollar after this news. Of course, it will have some effect, but very limited. And as I said earlier, I'm expecting the euro dollar hopefully to react to US data to be released later on the day.
Yeah, I believe we'll see some kind of reaction because it's very important release. But perhaps also bigger reactions in other currency pairs or commodity currencies.
Okay.
I some echo from you, I guess.
What? You have some echo from me?
Yes, sorry. So we are 1 minute to go.
No better. Okay, here we go.
Yes.
Market's nervous.
No change. No change.
Okay, yes.
Change anything.
Everyone voted unchanged.
Yeah,
So
as
now,
expected, as Yohay and Valeria said before, everything is maintained in the status quo.
okay, so not much of a reaction till now. The market is eagerly reading the minutes. Let's see what the headlines are coming from there. Not sure if they are already out. I'm not seeing them yet.
We have a reaction. No. Pound dollar 132.36.
MPC maturity expect rate cut if focus only confirmed. There's a headline there, a tweet. Okay. Not much yet out.
No, looks like they managed not to rock the boat.
Yeah.
It's really slow, the Bank of England page.
Yeah. Probably that's because we are not getting much info so far. Very limited market reaction so far. Pound moved maybe 20 pips.
The price expected less slowdown. Yeah, moderate slowdown in the UK in second half of this year. I have some
That's why
noise.
pound is rising.
Have some noise, I guess. It's from AC, Valeria, maybe.
What?
I can turn my microphone off.
No, I think it's
I
from
don't-
Valeria, from the AC.
No, it's not. I don't have anything.
Okay, so it could be mine. Let me check.
Anyway, the Bank of England leaves policy unchanged, and they're a bit more optimistic about the economy.
Yeah. Quite non-event seems to have been this meeting so far.
Yeah, they say that the initial impact of the policy package is encouraging. They are happy with the first measures.
So basically, they're saying we saved the economy.
Yeah,
Yeah.
we saved the UK. We saved the Queen.
Yeah.
It's pretty much what I was saying before the announcement, what Carney said in the latest testimony before the Parliament. I'm still trying to remember the exact word he used, but it's not the case. The fact is that that's what he said. That the economic recession could be avoided because of their fast action in August.
Yeah, so, and the people are gonna, I mean, his critics are gonna say, well, the economy is doing better, but not because of you, because Brexit was not such a disaster in the first place.
Well, the critic will say everything against you if they want to criticize you.
Yeah. So that's the big argument. I mean, it's more politics than, well, than impact on the pound at the moment.
I remember that Carney said he was absolutely serene about the way he warned of a possible Brexit and the measures he took in the August meeting. That's absolutely serene. Those are the words he used. So
Serene.
yeah, he remains serene, not planning to do much.
And they also say that the package of measures announced in August meeting led to a greater than anticipated boost in the UK asset prices. Yeah, basically they are happy with them.
Basically, we're having not much of a market reaction, and therefore it's wait and see until, at least for today, until the ES releases in a couple of hours, right? 2 hours or so.
An hour and a half. Mm-hmm.
Yeah.
So what we can expect for the pound? Let's see. Let's start with the pound.
I do believe that not much at this point, at least after this Bank of England announcement. Overall, I still see the pound being a bit stronger, but we're near that key resistance area, as I said, and we need a huge trigger, in my opinion, to clearly break this region and be able to rally to 135. And I don't think that neither the Bank of England statement we have just heard of, nor the upcoming years data will be enough to do so, unless it's really, really disappointing in all its points, But what I'm waiting for in the market, unfortunately, is to have some more consolidation ahead of the Fed meeting next week, unfortunately, as I said, because we are pretty boring in here. It's pretty boring, sorry. But anyway, short term, there's sort of a resistance, a short-term one around 32.80. So if we surpass that level, we can go back to that 33.20, 33.50 areas we mentioned earlier, and that's the most I'm seeing in the pound. And as also, as I mentioned before, below 32, we can retest lows seen earlier this week around 31, 38, I do believe it was.
Totally a non-event for the pound.
Yeah.
Looking forward, I would expect the pound to be one of the stronger currencies. That's because we had better than expected retail sales from the UK this morning. And also the message from the BoE is, well, very, very slightly more optimistic.
Neutral, I said.
Yeah, very neutral, but not maybe extremely dovish. I mean, if we have a weak retail sales in the US, I would expect the pound to rally more than the euro. Let's put it this way.
Yeah.
And if we have very strong retail sales in the US, I would expect the pound to fall less than the euro.
I agree with you, and I do believe that the Aussie will replicate the euro behavior in years schedule.
Yeah. Australian dollar is sort of the weaker commodity currency. So
yeah.
What do you think about crosses like the euro pound and pound Japanese yen?
Well, for the euro pound, we are also in a consolidated stage, as all the market is. But I still think that the pound is stronger than the euro, despite we have been seeing the euro holding around this week so far. But in the larger and wider outlook, I do believe that the pound will won the battle. So I'm expecting some slides in here, not much, probably 283, 8250. Next week, of course, not much going on this one. In the short term, what I'm seeing is that, take a look at my 200 exponential moving average, right? It's pretty much horizontal ever since the month started. So that is telling me that there's no clear directional strength. Although the 20 simple moving average, this shorter one is sort of bullish, not enough to call it bullish, but slightly higher. So I would like to see a break below this region, 84.50, 84.60, to confirm a bearish move. But almost I expect it to go lower.
Do you want to add something, Yohay?
No, just also the euro pound. I'm bearish. I think the pound is stronger than the euro, and well, against the yen, it's a more complicated thing. We have the Bank of Japan next week.
Yeah,
so
what about the dragon?
Yeah, dragon. So I think for pound yen, for the dragon, the focus moves as of now from the Bank of England to the Bank of Japan. That means I think the yen will lead the pair movements around the yen. If we have bad news all over the world, the yen is a safe haven, and if we have other things, very easy monetary policy from Japan, that'll weaken the yen, and the pound sort of takes the backseat here for after a week of focus on the pound with inflation, retail sales, employment figures, and of course the Bank of England. Now the pound moves back.
I do believe that ever since the Brexit, we have been focused a lot on the pound, and maybe this is the last we have from that. We will probably have to change market's focus from now on, because it's becoming not irrelevant is the word that I'm looking for, but less relevant, and probably not the main market mover, right? It has been for a couple of months, but it's not any longer.
The war was like a panic from the Brexit, but finally it wasn't too hard. I think that right now they will start changing focus to the United States economy and United States election. What do you think? I think, I know that Yohay, you make some coverage about the United States election. What's going on there?
Well, in general, the race has tightened. That means that Trump is much, much closer to Clinton. The most recent, here is the assessment, according to the website I follow, 538. They use lots of polls. It's now 2/3 more or less for Clinton, 1/3 for Trump. It was around 90%. You can see it here, how things have become much more tight than they used to be. There are lots of reasons for that. What we need to know for the markets is that despite Trump being a Republican, and usually Republicans are more pro-business, pro-market, the markets do prefer Clinton, which is a known figure, mainstream, against Trump, which is a wild card. That means that we have now more uncertainty about the elections, and this could cause more volatility, more. I think that part of the stock market sell-off, we can attribute part of it not only to worries about the Fed or ECB, but also a bit to politics, to the events over the weekend, in which Clinton also fell sick and also made some comments about Trump supporters, and she lost some ground to the polls, and I think this also contributes to things. And in 10 days from now, I think, on September 26th, we have the first debate, and then we'll see if markets really react to that, to the elections, because we have a single big event, which is the debate between these two candidates. So I think it'll be more of a focus, the Fed next week, than the elections.
Yeah.
As Valeria said, the pound is a bit. We had so much focus on the pound, now it's gonna take a break.
Yeah.
Every time that I see the charts, the race is getting closer and closer and closer. And Trump right now is just attacking Janet Yellen for the rates. Yeah. What would you say, Valeria?
About what?
you're gonna say something. Sorry for interrupting you.
No, sorry. I was about to say that we are 2 months away from elections, so and we have plenty of events ahead of it, so probably not the center of attention right now. Of course, it will be later, but not this week, neither the next one. I don't know, maybe by the midst of October, then the market will focus probably on the US election and not before.
Okay, guys, what we can expect for today, Yohay? We have what we can expect for the retail sales and the jobless claim. What we can expect for that key data in the United States. Yohay?
Retail sales are the most important figure. Headline figure is expected to drop by 0.1. Last time it was flat. Another thing to watch is what's called, core retail sales, which is expected to rise 0.2 after falling 0.3. Of course, there always are revisions. And there's also a third one called the control group. This was flat last time. They expected to rise 0.3 this time. All in all, we're expecting improvements from the previous month. If we get them as expected, or if it comes below expectations, of course, it'll end any kind of last speculation about Fed rate hike. If we have it really, I guess, 1% rise or even higher, then of course there will be some speculation. In any case, I think the chances are very, very low, just because the Fed told us that. I mean, they didn't give us the smoking gun for a rate hike, and last time they made all the preparations for rate hike. So so we're expecting some kind of an improvement. A small improvement is not enough for Fed rate hike. We need a huge improvement. Yeah.
In everything today.
Yeah.
Everything. New York Empire State, producer price index, weekly unemployment claims, manufacturing data, everything.
Yeah.
And that maybe could wake up the euro dollar. It's not sure. For sure.
You wish.
I wish. Meaning, the pair has been trading in between 60 pips ever since the week started. I was thinking, right, that when I was studying Forex back in the past century, we always said that as tighter the range and as longer it lasts, the huger will be the breakout lighter, right? One way or the other. Of course, we don't know which, but at some point, right, things will finally broke out and start to trend, right? But I was taking a look at the bigger time frames in the euro, and if you take a look at your weekly basis, with a couple of exceptions, we have been trading in between 1.08 and 1.14, right? Meaning 600 pips range ever since early 2015. Okay, over a year and a half already that we have no trend in this particular pair. And still is the most rated and the one that got us the most attention. And of course, I have flipped that kind of view for myself. I'm paying a lot of attention to the oscillator. In this last couple of years with the euro flat. And it's, of course, much more interesting than what we have in here. So what I'm trying to say here is at some point, right, we are going to have a breakout and we are going to have a trend and we're going to enjoy it a lot. The problem here is that we don't know when that will happen and which will be the trigger. I was also thinking that the past week, it started the same as this one, with the market pretty much doing anything for 3 days and reacting only to the poor ISM non-manufacturing reading in the US, right? But it was a short-lived reaction. It lasted that day, and the next day the market reversed course, and we are back to 1230, and here we are again. And this week we have 4 days of range. So actually, it's a bit stressing trying to take out something of euro dollar. But remember what I'm saying, guys. When it finally breaks out, it will be huge.
Why?
So be patient. Just a bit more patience.
Okay. Yohay, we had the Swiss National Bank this morning. So what they did?
Nothing. They left all policy unchanged. They repeated the same rhetoric about franc being too high, unjustifiably so, and basically they repeated everything they did. For me, for traders, I think we got enough information. I mean, we got the same thing. We know once again, for me, yeah, that stay away from the franc. The S&P continues intervening. There are so many other currency pairs.
Yeah.
As Valeria said beforehand, euro dollar is frustrating. Eventually, it'll explode. I'm waiting for that day. The Swiss franc is not, especially euro Swiss. If you're frustrated from euro dollar, you'll be even more frustrated by euro Swiss. And when it does explode, you don't understand why. I mean, you understand it's the S&P, but it's totally unpredictable. So that's it. Until the next 3 months, at least, Swiss franc is, for me, a no-go zone.
Yeah. Furthermore, because the Switzerland National Bank is doing quiet intervention here and there, right? That's the most unpredictable fact about trading the dollar to Swiss. You don't know when it's going to move. Of course, you can see it because it moves on itself and alone, not alongside with the rest of the market. And in those particular moments, you can tell the Switzerland National Bank is acting, right? Trying to do something, intervene in the market. But the fact is that you will see also that those movements are quickly reverted at the first chance, right? The first excuse the market has, it turns down all the effort made by the central bank. So actually, if you noted something weird going on in the Swiss chart, you may want to wait a bit and then go in the other way, because that's what probably will happen, and where you will probably succeed the more trading dollar chaff.
Okay, let's try to cover the gold. Valeria, what do you think about gold, about commodities?
Well, we don't have too much action so far also this week, although I'm pretty much surprised, because we have a lot of sell-off in stocks and some risk-averse sentiment, and the Fed now with less chances to act this week. All of those are usually bullish for gold, and we don't have that coming on. So maybe it's time for a deeper bearish corrective move. Of course, I'm pretty sure we will have a lot of action next week with the Fed and not before. But I'm seeing an increasingly bearish potential in here. We have been down to 1302. Early September, right? So maybe we can go even lower, correct lower, if the dollar somehow strengthens, but not seeing much of a decline beyond 1250, 1260 region, okay? Those are my main bearish targets in the longer term. But if the Fed stands on hold, then maybe we will recover some ground. I have this 1233, 35 region. We have plenty of intraday highs, daily highs and lows. The Fibonacci, this Fibonacci resistance right now there, meaning I would like to see some follow through above that level to talk about an upward continuation. Something seems quite unlikely right now, Maybe if today's data is extremely disappointing, the commodity can rise up above that 24, 25. We can go up to that region I mentioned, 33, 35, and that's the most I'm seeing right now. And if somehow with the Fed, the commodity breaks above this level, we can go back to the highs within this year around 1375. Honestly, not seeing much more upward potential in gold, to be honest. As we discussed plenty of times, 1400 seems to be sort of a strong ceiling and a level to watch.
Okay, what about the oil?
What about oil? Oil is a mess. It's a big mess. because the market is once again fearing that the market is oversupply, right? We have been hearing about the possibility of OPEC and non-OPEC members discussing again an output freeze. They have did this before in April, I do believe it was this year, and of course at the last moment denied it. And the market is now focused on a meeting that will take place by the end of this month. Also, it's an informal meeting. It's not, which makes it even more likely that they will not come to an agreement. Sorry, but anyway, despite stockpiles yesterday, oil stockpiles yesterday fell sharply, but at the same time there was a strong rise in distillate products stockpiles, and the American Energy Agency reported that it's way too high. Those levels are way too high, and that's what's caused the latest decline, right? Because the market was betting or believing that the oversupply issue will end this year, and the fact we are all now believing that it will extend into 2017. So
Also,
that's
production is up.
yeah, also production is up. So yeah, you're right. Thanks, Yohay. So overall, that's telling me that oil will probably fall. We have from a technical point of view, I mean, an immediate support around 43, which is a Fibonacci retracement, and where the commodity already bottomed earlier this month. Below that, I can see it going back to 40 a barrel. I'm still not seeing it back to 25 or so, but if these fears of a worldwide glut persist, then yeah, we will probably go back to that 25.
Yeah, and also, the oil is everything but free on the market. It's not a free market. There is like Russia and Venezuela that wants to push the price up, but Arabia Saudi is just pushing down because they don't want the price to be more than $55 up. Okay, I have a lot of noise here.
It's you.
It's me, right? Okay.
In general, in all the world, countries want the other countries to cut production. They want a higher price, but to continue pumping at 100% capacity. There's lack of trust between most of these countries.
Greed.
And
They're all greedy.
yeah. So if they can't cooperate, they just continue pumping out oil, and oil prices are pressured. Eventually, some production falls, but each time production falls and prices rise, it is eventually followed by another rise in production and another fall in oil. So, yeah, lots of pressure to the downside.
Yeah, but the thing is, let's see if the noise let me talk now, but I don't think so. The thing is that they don't want the price to go up, to go above 55, because they want to fight the fracking, the fracking.
Yeah, the fracking in the U.S. industry.
Yeah. And then they want to push the price lower, because in that way, the companies in the United States will stop investing in fracking.
Yeah,
it's like a long-term, short-term punishment, but long-term profit.
Yeah, eventually production did fall in the United States. Then prices began going up, but once they went up, production went up once again. I mean, the U.S. shale industry is so flexible. Eventually, prices remain lower for longer, like interest rates. So here we are.
Okay, what we can more cover? What about the stocks? What we can expect for the S&P? Yohay and Valeria?
To be honest, I don't follow them that much. I do see them falling US stocks sharply after being quietly for most of the summer. I do believe that the last thing in here will be the Fed next week, and then elections, as Yohay mentioned earlier, with market being more comfortable with Hillary winning than with the loose bullet that Trump is. But Honestly, I'm not expecting much in here until next week, and not following them much. I'm actually watching is the fact that the Dow Jones has planked at below 80,000, but quickly recovered. But it also quickly returned to that region and wants to challenge those lows. So I see an increasing bearish risk in here.
Yeah, maybe markets will be sort of happy to hear a dovish message from the Fed next week. That could help stocks recover the falls of the last few days.
What we can't forget is that the market is at record highs after over 6 years of rally, right? And that the risk of a bearish move, finally corrective, big, huge corrective movement can be dismissed. Sorry, I interrupt you.
No, I also think, but we're in a long waiting for this. It's called one of the most hated rallies in Wall Street, and so we're waiting for the crash. So far, no crash, but also no move forward. Sort of, especially in August, stocks were stuck. Let's see the reaction. I think that after the Fed, we'll see the real colors. If the Fed goes dovish and stocks react positively, everything's okay. But if the message from the Fed will not be enough, I think that will be perhaps a bearish signal for further losses. But yeah,
in the S&P, here, like a triple top here, it was like an easy short, but I don't see any kind of bearish market. It's like the uptrend is really strong enough to support any kind of short-term retrenchment. But okay, let's move on. So guys, what do you think about there is a comment for you, Valeria, there is a comment in the chat about the cable. What do you expect for the cable? Is there is a sort of sell there or not?
I do see it under some short-term pressure, but as I was saying, some follow-through below 32 is what we need right now to confirm bearish move. And given that the US data is less than an hour away, I do believe that will be the trigger for the next pound move. But yeah, the fact that it didn't advance beyond that 33.20 area is of course increasingly bearish for the pound. I don't see it breaking through 130 in this month or the next, meaning I do believe that we have met comfort zone in between probably 130 and 133, and that's in the wider view, right? In the short term, slightly bearish don't persist indeed.
Yeah, do you want to add something, Yohay?
No.
Okay, guys, what do you think about to do a wrap up to explain people what's going on here, what's happening, and what will happen in the next few days, in the next few hours? Valeria, if you want to start.
Okay, well, we have the Bank of England announcement, an economic policy announcement, and as largely expected, they left their rates unchanged, assets purchase program unchanged, nothing new under the sun there. And the minutes were quite conservative, not dovish, not hawkish, so we don't have much of a market reaction right now. And we are all focused on, in the short term, on upcoming US data that could tell us whether the Fed may be able to rise rates or not. And that's, of course, is the center stage, right? If the Fed does or does not something or do not next week. So for today, I'm expecting the market to react accordingly to the upcoming US data. And for the rest of the week, I would expect some consolidation as we are getting closer to the Fed. And we should not forget the Bank of Japan also meeting that will take place a few hours later than the Fed. So yes, we are not going to see much until then. Not much market definitions, okay? The fact is that the euro, I can see it breaking out of that 112, 112.70 range. We have been trapped ever since the week started, unless the upcoming data is all actually bad or all really, really good. If the data is good, we can go back down to 1160 and even 1120, which is the low we posted last week, right? The 1120 region in here, sorry. And what I'm also following in the dollar, euro dollar pair, sorry, is this descendant trend line that's coming from May high around 1615, right? We have retraced from it a couple of times. We have tested with the ECB, right? A couple of pips above, but quickly back down. So today the trend line comes around 13. So if we break above the level, we can go up to 1335. We have some highs in there, and up to 60. So that the most I'm hoping it could happen with the euro today.
Yeah.
Okay. Yeah, Yohay. So the Brexit is over. So the initial impact in the market is over from the Brexit, and we can move over or not? Is it still there?
Not yet. I do believe that we are going to see a bit more of action when they trigger Article 50 and whatever happens with that and how the Euro Union reacts. But yeah, it's like the issue has cooled down a bit.
Yeah, I think November is a big month for the pound because we have the autumn statement from the government, which is actually a new budget. We have a new chancellor, a new prime minister, and of course the next big decision from the Bank of England, actually the next decision in general, which they also have the quarterly inflation report. So I think until November the pound will sort of be on the back burner. We didn't hear anything special today from the Bank of England. Follow up on what Valeria said about euro dollar. Very frustrating range. I think euro dollar is the new dollar yen, but that gives us hope that eventually, as Valeria said beforehand, after a long period of consolidation, frustration, we'll see things explode. To which direction, I don't know, but hopefully we'll have action also in this frustrating period.
Yeah, I like your quote that the euro dollar is the new dollar yen.
Yeah.
So guys, what we can, go ahead, Valeria.
So sorry, I was saying that they have been trading in parallel, against greenback. It has been going on little in both currencies ever since last year when the euro gained that sort of safe haven status, right? So we can see even movements in between the euro dollar and the dollar yen exchange. So it's not a surprise that they are all flat.
Okay, guys, what do you expect for the Federal Reserve meeting next week?
Dovish?
Really?
Dovish.
Yeah.
But there is like the council is like a going debate. It's going to split, not like unanimous, like the previous meetings. But it was like some officials are bullish right now for a hike. So Dovish again?
I would say no hike is sort of the safer bet unless we get really excellent figures. And so the focus, I think, will be on the message. They'll keep hope alive for a December meeting. But then, of course, everything depends on the data. The data should be good enough for a December move, also after the elections. But in general, the Fed is usually dovish, and I expect them to repeat it. What do you think, Valeria?
Honestly, I'm not sure what we're going to hear because we're having a lot of mixed messages coming from the Fed lately. But I'm expecting a bit of a hawkish stand, contrary to you, because of what Yellen particularly said in the opening remarks of the Jackson Hole Symposium. Still, I do agree with you that we are not going to see a rate hike this month. And if it happens, it will be a major surprise for the market, and we can see wild movements going on, of course, dollar crosses. That's the most I can think right now, right? But I know what the Fed will do. I wish.
Yeah, I think if we do have a rate hike, you could see maybe euro dollar falling under 109.
Yeah,
and
that kind of movements.
yeah, because I think it was BNP Paribas or another French bank that they still expect a rate hike. But most economists, most banks don't expect a rate hike. Most the bond markets don't expect a rate hike. So if we do get it, that'll be, of course, that'll be the big explosion we're waiting for, I guess. But again, chances are low.
I was thinking that the Reserve Bank of Australia is expecting a rate hike. The Switzerland National Bank is expecting a rate hike in the US, I mean, right?
Yeah.
There are many central banks around the world that are expecting the Fed to act. The Bank of Japan also, right? They're expecting the Fed to act and save their lives, sort of saying. Right? That's the correct word to use in live coverage, but you know what I mean, guys, right? They are waiting for the Fed to act, right? And those are the ones more eagerly waiting for a rate hike in the US.
Yeah, maybe they know something we don't. Maybe they heard something from Yellen in Jackson Hole. Remember, Kuroda was there as well, and other central bankers. But I believe it's more their wishful thinking and not something they know.
Yeah, I do agree with that.
Okay, guys, thank you for coming today. It has been a pleasure. I think we can close the coverage now. Move to Dr. Sivaramanda. We'll have another show covering and reviewing their positions after the BoE. So thank you, guys. Thank you, Valeria.
Thank you, guys. Nice to be with you as usual.
And thank you, Yohay.
Thank you. My pleasure as always.
Next week, right, with the Fed?
Yeah, next week. See you next week, and see you, Valeria, on Tuesday, and Yohay on Wednesday, and all together on Thursday for the ECB. Okay. And not for the Fed. For the Fed.
Fed on Wednesday.
Yeah. Don't rush. Not so fast. Okay. Okay, guys.
Guys.
Thank you, everybody.
Okay. Thank you.
Thank you.
Yeah. Thank you, everyone, to come here. Refresh your browser, and you will see the next show. Bye-bye. Trade safe. Seatbelt. Bye-bye. Long life to the trade.